Welcome back to the channel. Today we are going to talk about Opendoor and why this upcoming week could be one of the most important ones for the stock. There are so many moving pieces right now, from technical signals to rate cut expectations and labor market data, and I want to walk you through everything you need to know. But before we get into the details, make sure you hit that like button. It really helps out a lot. So starting with the stock itself, Opendoor has been trading with solid momentum recently. If you've been following along, you'll notice it has stayed above the 10-day moving average since around August 11th, which is generally considered a bullish sign. That alone has kept a lot of traders optimistic, but what really matters now is whether the stock can build on that strength. And for that, we need to look at what's happening behind the scenes. Big money has been active in Opendoor, with options activity signaling optimism for the coming sessions. At the same time, shorts are still lingering. Right now, about 24% of the free float is shorted, which means more than 158 million shares are betting against the stock. They've pulled back a little since late July, when short interest was closer to 34%, but the pressure is still there. That creates a setup where any positive catalyst could easily force shorts to cover and fuel a stronger move higher. The market is also waiting for bigger catalysts beyond just the technicals. There has been talk of a new CEO announcement, though nothing has been confirmed. That could land anytime or not at all, but it's something on the radar. More importantly, though, we're going into a week where the Federal Reserve's next move on interest rates could take shape. Current odds suggest an 86% chance of a 25 basis point cut, but the exact size depends heavily on the labor data that's about to come out. This week's calendar is loaded. Because Monday is a holiday, things really kick off on Tuesday with ISM manufacturing data. Wednesday brings JOLTS job openings and ADP employment numbers, both of which are important labor indicators. Then Friday caps it off with non-farm payrolls and the unemployment report. What's interesting here is that weaker labor data could actually be good for Opendoor and for growth stocks in general, because it would strengthen the Fed's case for cutting rates more aggressively. At Jackson Hole, Jerome Powell emphasized that inflation is on track toward the Fed's target, but labor is still a concern. If the labor market continues cooling, that could justify not just a 0.25 point cut, but potentially even a 0.5 point cut in the near future. For a business like Opendoor, lower rates are a direct tailwind. Cheaper borrowing means more housing demand, more transactions, and more revenue. That's why this week is so critical. The outcome of this labor data could set the tone for housing-related companies and the entire growth sector. Looking at the charts, Opendoor closed around 445, trading between support and resistance levels. The key resistance to watch is at 5.15, and if the stock breaks that, the next target is around 563. On the downside, the main support levels are 4.38 and 3.61. If consolidation happens, those are the areas to keep an eye on. But with the potential catalysts in play, there's also a good chance we see another test of the recent high at 587. If it manages to push past that level, then the upside opens up even more. Another thing worth mentioning is the trading activity we saw back on August 25th, when turnover hit a wild 116% of the float. That shows just how much algorithmic trading and momentum can come into play with this stock. When those algos are active, moves can happen fast in either direction. Opendoor has already gone through different phases in its life as a stock. It started as a meme play, then moved into more of a cult following, and now it looks like it's transitioning into being seen as a legitimate growth company. That's an important shift, because it means more institutional investors may start to take it seriously, especially if rate cuts provide a favorable environment for the business model to thrive. Overall, I think this week is going to be huge for Opendoor. Between short interest, rate cut odds, labor data, and potential company-specific announcements, there are multiple drivers that could create volatility and opportunity. In the near term, I think realistic upside is in the $8-10 range just based on momentum and institutional buying even without a squeeze. If shorts start covering or a major announcement hits, things could move even faster. So whether you're trading the technicals or holding for the fundamentals, this is a week to pay close attention. Big money is circling, options flow shows optimism, and the macro picture could line up in Opendoor's favor. As always, I'm not here to hype or spread fear, just to read the data as it is. And right now, the data suggests a very interesting setup ahead. Disclaimer: this video is for educational and entertainment purposes only. I am not a financial advisor, and nothing discussed here should be taken as financial advice. Always do your own research and consult with a licensed professional before making any investment decisions.